Okay, let's see if this is on. We're on? Yes, we're on. Okay, hi everybody. How you doing? Okay, this is Uncle Bruce with Stock Markets with Bruce. And I'm giving you an update today on this GameStop eBay takeover story. This will be my second video on this story. The first one I did a couple of days ago. Thank you for those of you who've been watching. Thanks to those of you giving the video a thumbs up. And thank you for subscribing to this channel, because I always forget to ask, please subscribe to this channel. Okay. I have an update for you. How can you make money as a passive investor, as an individual out there? You have no skin in the game. You don't own any GameStop, or you do. You don't own any eBay, or you do. You own both, or you own none. How can you make money now that the word is out and the deal is circulating around? Is there a way you can take advantage of this situation to make some dough on this merger? And there are several ways that are available and are being handed out on a silver platter, and nobody, and I mean no one on YouTube that I can tell, is telling you how to do it. I'm going to tell you how to do it. I love this game. I like this game. Man, can you make money? If you watch my channel, if you've been watching me over the years, you know I love the stock option game, and I love writing stock options and helping you become a stock option writer. Head your butt over to my website, stockmarketswithbruce.ca, my Canadian website, and get yourself over there, because you'll find that I have a whole bunch of lessons on how you can be an option writer. And there are ways to make money in this business as an option writer. But there are ways to make money on this takeover deal without being an option writer. I'm going to talk about those as well. What a guy. Here is the the address of my website, stockmarketswithbruce.ca. It's right there. And there are 19 lessons on that website. How to become an option writer. Start with lesson number 1, and then take lesson number 2. You can watch them as many times as you want. You can buy them in any order that you want. I recommend, if you have never done option writing before, start with lesson number 1. It's your home college course, and do a lesson every couple of days. Watch them as many times as you want. There's no quizzes. It's all in plain English, and that's what I'm going to try and do with you now on this whole story that's going on here in plain English. All right, first of all, let me quickly show you something on the screen. I'm going to, in effect, slap something right in front of my face here. First of all, this here, I believe is, who is this? Let's see what this chart is. It's coming up, just bear with me. It's GameStop. Okay, so, all right, GameStop, all right. You can see the price of the stock tonight is $24.12 in the after hours. Tonight it closed at, where is it down here? $27.23, right at the bottom down there, $27.23. And then you can see today's chart, what it did all the way along, okay? What I want you to know about GameStop is that there are 444 million shares outstanding on GameStop. 444 million shares exist on GameStop, okay? That's one thing I want you to remember. Now I'm going to show you another little chart. Again, I'm going to put something right in front of my noggin here. This is eBay. This is eBay. Here it comes. Today's close, the after hours. Right now in the after hours, it's trading $106. It closed today at 105.26. Can you see that? And there's the what it did today. It was down a little, up a little, flat. Okay. A little tidbit for you of information on eBay. There are 444 million shares outstanding on eBay, just as many shares as GameStop. Now, this is going to get interesting. You've probably heard all kinds of talk now in the last 2 days with this takeover deal that GameStop is a lot smaller. They're only about a quarter of the size, market cap wise. They're going to try to do a half cash, half stock takeover offer where it's $125 a share, half in dollars, $62.50 in cash, and then the rest will be stock. Well, let's just, for sake of simple math, okay, help me here. The stock closing on GameStop today was, like I said, about $24 a share, and eBay $106. if you're going to take over a company for 125 a share, and 62.50 is cash, and the other 62.50 is stock, and you have a $24 stock, which is what GameStop is at the moment, you're going to need about 2.5 shares. 2.5 times 24, roughly, 48 plus another 12 is $60. It's 2.6 shares of GameStop to get the eBay shareholder. So if you're an eBay shareholder, you own 1 share, you're going to get $62.50 in dollars. You can get 2.5 to 2.6 GameStop shares. That's what the eBay shareholder will get. Now, if we take the big picture, 444 million shares outstanding, and you are issuing 2.5 million shares for every share out there, 2.5 times 444 million, we're talking 1.1 billion shares, give or take, that have to be issued from the treasury of GameStop. Don't hold me to exact numbers. It doesn't matter. Okay, we don't need to get into pennies right now. I want to give you the general picture in plain English. GameStop is going to issue about 1.1 billion shares on top of the 444 million that are out there. That means there'll be around 1.5 billion shares in existence. eBay shareholders will get $62.50 cash if this thing goes through, and then they'll get the stock. Okay. eBay shareholders will have 1.1 billion of all the shares. GameStop shareholders will have 444 million of all the shares. And so you can see how eBay's shareholders will be the dominant shareholders of the company, except there'll be a couple of changes. And one of them will be that Ryan Cohen, the CEO and chairman of the board of GameStop, will be the CEO and chairman of the board, likely, of eBay. And the company might be renamed eBay. They might name the company eBay and drop the GameStop name altogether. It doesn't freaking matter. What really matters is that once the two are together in one big fat unit, there's a $20 billion loan out there that the new company will have to deal with, the takeover, the shareholder payoff. That's what part of it, the cash. There's going to be about $3-4 billion in cash left in the bank account, because there's cash in eBay's bank account. That'll now be part of the new company. But the big change will be all directors of eBay and all senior management of eBay are likely to be replaced within 6 months of takeover. And those salaries and those benefits and those payoffs and all those stock options being granted to all these insiders, they'll all be vested and excused. They'll all be paid off. And going forward, right away from that point on, eBay's expenses to run its business will be billions less a year to run. Because Ryan Cohen is going to do one big thing. He's going to clean house and make it much more efficient. All right. I talked about this last video. You've heard about it. The end game is this. What will the new shares trade for of the combined corporation? That's what I'm trying to get to here. And would it be possible that both shares combined, both companies now as one big company, would the shares be trading around 40, 50, 60 bucks a share when it's all said and done? For GameStop shareholders, right now, they got a $24 stock. They're sitting there going, hey, if the stock trades at $30, $40 after the merger's completed, we're up. We're up 5, 6 at $30. We're up 5, 6 bucks. At 40, we're up $15 a share. I say to you, you want to make some money on GameStop and you believe that that's what's going to happen? Then you buy GameStop shares right freaking now. Buy GameStop. Use margin with your broker. If your broker lets you buy one share of GameStop, which is trading at $24 with margin of 50%, you're paying $12 cash to get your hands on a share of GameStop. Don't mind me as I write this down. Hope this is visible on the screen. Yes, it is. Stock is $24 right now, ballpark. And if it's going to go to 40 after the merger is completed, that's a gain of 16 bucks. Okay, that's plus $16. You buy it for 24 and it goes up $16 for you. You just made yourself a nice little return on your money. You made about 60% on your money. However, if you were to buy it on margin from your broker and you put up 12 bucks, You might be able to put up less, but I'm just saying you put up 12. You put up $12, and this goes to 40. Okay, that's a differential of still a gain of 16 net. Let's explain that. You borrowed $12 from your broker. You put up $12, right? And so you got to give the 12 back to your broker if you sell the stock at 40. Fair enough. You're left with the change, which is $28. Your money, 12 plus the profit of 16. In effect, you've made $16 profit using $12 of your cash. What kind of return is that on your money? 133%, because you paid your $12 plus another 4 on top of that. That's 133% profit. This is a profit here from 24 plus 16 of what did I say? 60%, 66%. That's just buying the stock. Oh, you don't like this deal? You don't want to buy GameStop because you're thinking, hey, why don't I buy the stock of eBay? They're the takeover target after all, and maybe they'll go for more than 125. I've talked about that in my first video. What would that look like? Oh, let's play that game. Oh, I love this game. I love this game. Let's take a look. Let me get this out of here, and don't mind me. I don't have high-tech, fancy graphics or anything like that. I'm just a guy with a blackboard, trying to not show you the big ring up there. Okay, here we go. eBay. Okay, so here we go. eBay. There it is. That's your stock symbol. Okay. It's trading right now at $106. Okay, so you could buy the stock for $106 a share in cash. And if you get taken out at $125 a share under the so-called takeover proposal from GameStop, what will you end up with after the deal? Okay, let me make the line here. You'll get $62.50 in cash plus stock in the new company, which is, as I say, 2.5 shares roughly to 1. So one share will now give you 2.5 shares. Again, it could be more than that, but 2.5 shares. What will the shares trade at? I just did that with GameStop. Let's say they're trading at $40 a share. Remember? $40 a share, okay? Times 2.5 equals $100. You got 100 in stock plus the $62.50 in cash. And what do you got? $162.50 is what you have. $162.50. You see all that down there? Can you read my chicken scratch? Your eBay started at $106 today. You bought it now. Yes, you got taken out at $125, and it's $62.50 in cash in your pocket plus 2.5 shares, and they start trading at $40. That's worth $100 plus your $62.50. You got $162.50 for your 106 investment. Does this make sense to you guys? So $162.50 less $105. There it is. $57.50 in profit. That's your win. That's a cash deal. Buy this on margin. You want to buy this stock on margin? You put up half the money, $53. So you put up $53 instead of $106. You borrow the other $53 from your broker. You get bought out by GameStop, $125 a share, half cash, half stock. The $62.50 per share will pay for the $53 you borrowed to buy this stuff, plus leftover cash, right? And you got your stock as well. In effect, in this example, I'm telling you there's a $57.50 profit in the deal. You only put up $53 to make $57.50. That's all you have to worry about. You put up half this dough and you still made $57.50, assuming the shares will trade at $40 a share. I think the shares will trade more than $40 a share. Why? Because I just told you a few minutes ago, Ryan Cohen is going to clean house. He's going to get rid of all the fat inside that big, fat, lazy company over there. And hey, I love eBay. They make money. They're okay, but they have 11,500 employees. The directors of the company get $4.5 million in directors' fees every year. That's all gone day after Ryan Cohen takes over. The directors are going to get 100,000, 200,000 a year max. Each director will get 50,000. There'll only be 10 of them. That's $500,000 in directors' fees from 4.5 million. Those fat cats are loving life at eBay. Okay, the management of eBay will not have gobbledygooks of stock options left, right, and center. Those days are over. So $2 extra billion in profits will be made by eBay just from cost reductions. Instead of making $2 billion a year profit, eBay is going to make $4 billion. Remember, Ryan Cohen has a $20 billion IOU on the new company that he has to pay off. Where is that money coming from? The efficiency of eBay alone will pay down the $20 billion. You'll get a $10, $15 loan, a year loan, 10, 15-year loan, it'll pay it off. He won't even need that loan. Because the other thing he's going to do, he's going to take his existing store network. He's talking about 1,600 of his stores in the U.S. that are going to become fulfillment centers for merchandise on eBay. It's going to make this company a lot more money. So if he adds another $2 billion in profit from the merger of the two businesses together, we got a company making over $6 billion a year in profits. The stock making $4 billion in profit, $4.5 billion in profit is approximately that works out to about $3 a share with all the shares outstanding. 20 times earnings, $60 a share. eBay right now is 24 times earnings. It was 22 times earnings a couple of days ago. 20 times earnings puts the stock at $60. So think, kids, think about this. Instead of the $40 a share mark, if that's $60 a share times 2.5 shares for every eBay share you have, what are you getting now? 60 plus 60 plus 30, $150 in stock, $62.50 in cash. You just took your money, $106, and turned it into $200+ dollars. Or on margin, you took $53 and turned it into $200. Are you listening, anybody? Is anybody out there listening to me? That's just the stock side of the equation. What if you don't happen to have that kind of money? I know, Bruce, I can buy 5 shares of eBay. I can buy 5 shares. I got $530. How much am I going to make? Well, you'll make $57.50 for every share you can buy. You'll make 5 times $57.50. But if you've got $500 on margin, you could probably then get 10 shares, and you could make $570 in profit. That's true. If the stock goes to 60, however, then that's 162. Then it's $212 times 10. You'll make even more. But that's just with 5 shares or 10 shares. What about stock options? What about all these lessons, Bruce, you keep talking about? What if I use stock options? Can I make money that way instead? I say, yes, you can, and you don't need as much cash. It's a question of how much capital you want to put up to this deal. Are you dealing with capital that's for your retirement? Are you dealing with capital that is in other stocks right now for medium-term investment? Can you give this investment deal, can you give this takeover deal, say 3 to 6 months to play out? Because you're going to need to. This won't happen overnight. I mean, Ryan Cohen's ready to cut the check right now. But there's going to be back and forth, and there's going to be all kinds of hanky-panky going on. The eBay management and directors are going to not want to be taken over by Ryan Cohen because they'll lose their jobs and their cushy payoffs, even though they're getting a big payoff to take a hike. eBay might try to be acquired by somebody else. They might decide why do we merge with someone else, or we'll take over somebody else. There could be legals and whatever. But what could ultimately happen is eBay gets a higher offer than $125 a share from somebody else, and it's an all-cash deal. And now, whatever number of shares you bought in eBay are winners. Now, for GameStop shareholders, don't worry. If you're a GameStop shareholder and they and eBay gets a better deal from somebody else, GameStop wins because they already own 5% of the company. Remember, GameStop itself is going to get $62.50 for every share they have already. 22 million shares are going to get $62.50 times 22 million times, and they're going to get stock. Now, if they take over themselves, it's just an internal turnover, and in effect, GameStop won't have to put up all $62.50 because they'll just be giving themselves the money and then putting it back into their treasury. But if someone else buys eBay for, say, $150 a share, GameStop sells their 22 million shares at $150 a share. GameStop didn't pay $150 a share. GameStop didn't pay 106. GameStop paid about $85 a share when they started buying 3 weeks ago. So GameStop will make $1.5 billion in profit on the deal, even if they don't get it. And those shares will go to $35, $40, and GameStop shareholders at 24 are winners. Okay, you want to play an option game on this? There's a way to do that. Let me rack this up one more time. You can stop this video and write this all down for yourself if you want to know what this is all about. Don't worry that I'm rubbing it away. It's okay. It's just my low budget way of making a video, which savings are being passed on to you. Okay, kids, thank you again for the thumbs ups. Please subscribe to this channel. How can you make money on this deal if you're going to go into the options side of things? Okay, well, if you're a shareholder of GameStop or a shareholder of eBay, you could theoretically right now write call options on your stock at a premium price, strike price higher than where your stock's trading at, and take whatever premium you can get. I would recommend you go out to at least January of 2027 to get some time premium on your hands and get a higher strike. But I wouldn't use that as my primary way of trying to make money on this deal. What I would do instead is, if you're a shareholder of GameStop or eBay, and or if you're a shareholder of any other company that is marginable and you own a margin account, which you're going to have if you're an option writer, then I would take a look at writing cash secured puts on GameStop or on eBay. And I would be writing out of the money cash secured puts. I would be writing, in other words, I would be selling a put contract that is lower than the stock price itself, either lower than the GameStop or lower than the eBay. So if I go over here on GME, I go over here on eBay, we know it's trading at about $24 right now. We know this one's trading at 106. Okay. I would be looking at doing an option, a put option. I'd be selling put options against the stock. So on GameStop, let's say you're writing $22 puts. So it's a $22 put contract, and it goes out to January 27, 6-7 months from now. I would be writing that put contract right now. Look it up and see what you can get for it and take the cash. If the stock stays at 22 or higher between now and January 27, these puts will expire worthless. You keep all that money. Now, $2,200 is what you're going to need to be able to write this put contract. It's one you're offering to buy 100 shares of GameStop at $22 a share between now and Jan 2027. That's what you're willing to do here. So you're putting up the $2,200 and taking the premium on the other side, and you keep that cash in your pocket. Over here on eBay, you could write a $100 put contract, good till January 2027. Same thing. The trick is you're going to need $10,000 to do the trade, because 100 shares of eBay, to commit to buying 100 eBay at 100 is going to run you $10,000. You can't write a cash secured put like for $7,500 in this case. But if you're using marginability on your existing account, you have an account worth, say, $20,000 of stocks and ETFs, and your broker lets you borrow, say, up to $20,000 of capital to write cash secured puts, you can write 10 of these, or you could write, you could write, 2 of these, 20,000. You could write about 8 of these, 8 of those probably for $20,000. And keep the premium in your account as cash and wait out this deal. If the eBay shares go higher than where they are now, let's say in the next month, they go up to 130 a share because there's a potential second buyer, those puts will drop in price very quickly because those puts are even further out of the money. And you can then buy them back early and take the differential and say, thank you very much. I had this stock anyway. I've got this account anyway, and I brought in a couple of grand on these contracts. Thank you so much. Same with GameStop. GameStop shareholders are getting excited about this deal happening. It's coming close to fruition. These shares might reach $26, $27, $28 a share. knowing when it's all said and done, these shares could be trading in that 40 range. These puts will be worthless very quickly, and you keep a majority of the capital. That's a cash secured put program that you could do here using puts. So that's cash secured puts. All right, I have another strategy for you that would require a lot less capital. You can do another strategy known as a credit spread. And I'd be looking at what's called a put credit spread. I would be looking to sell a put and buy a put contract at the same time with the same expiry date at different levels. For example, on Gamestop right now, I would be saying sell a $22 put contract that goes out to, let's say, goes out to July or August or September, as far out as you want. And then you would buy, let's say, a $20 put contract. The differential could be as much as about 20 to 40% of the capital you'd need to put up this trade. How much capital do you need to sell one and buy one at the same time? You need $200. You want to do 10 of them? $2,000. You want to do 100 of them? $20,000. And you get between 20%, 40% on the difference. So you get about $400. No, you get about, sorry, for $200, you're going to get about $40. For $2,000, you're going to get $400. For $10,000, you're going to get $4,000, $2,000, up to $4,000. Again, depending on how far out in time you go on this spread. Same here with eBay. You'll sell a put contract. You might sell, say, a $90 put contract and buy an $80 put contract. And the differential here will probably get you also into the 20, maybe 30 percentile range of premium on that put spread. You've got to do your homework on pricing, the day you're thinking of it, how far out the contracts go. But this is a nice return on your money from between, say, 90 days and 7 or 8 months. Let's say January 27, that's 7, 8 months from now. Between now and then, I don't think the eBay shares are going to be anywhere near $80 or $90 a piece. We got a 125 deal on the table right now. If you're a little more of an aggressive option writer, you could think about writing $100 puts and buying 90s, or writing 110s and buying 100s, because you're looking at a 125 potential offer on eBay. You can do this strategy anytime you want. You don't have to do it tomorrow morning. You can sit back and say, well, I just want to see what eBay says about this offer from GameStop. And I want to see how the shares react in the meantime as well. And I want to know whether eBay in the next week or two is going to come up with a third party, a white knight, to buy them out instead of going with the GameStop people, causing the shares to go even higher. It's up to you on timing. But it's also up to you, how much cash do you want to use? And this is why this strategy right here is so popular with my students who buy my classes. Because this trade is $1,000 trade to pull off. You need $1,000 in capital to write one of these put spreads. The difference between $80 and $90 a share times 100 shares. You're willing to buy stock for 90, but you're willing to pay 90 to buy, but you can also sell it for 80. Your risk is $1,000, but your profit margin is 20 to 30% if the shares go down under $90 a share. Same thing over here, 22 to 20. If the GameStop shares, by the time your options expire, go under $22 a share, you're obligated to buy stock, but you can also sell stock at 20. It's a $200 risk per contract with a 20 to 40% upfront cash gift to put the trade on. So in theory, if you're using $1,000 to do this trade, you're going to do 5 of these, you're going to get $200 to $400 upfront as cash, which you can't lose. It's yours to keep. You could lose $1,000. Yes, you could lose 1,000, but you lose 1,000 less the $200 to $400 you're getting for this position. So you're risking $800 to $600 actually. On this one here, $1,000 up front, you're getting $200 to $300 depending on the strike premiums you're getting. You're getting $200 to $300. You're risking $700 to $800 is your total risk. So you don't have to put up 50 grand to do this one trade. You don't have to buy 100 shares of eBay and write one contract. You can do eBay or GameStop speculation on this takeover deal with 200 a contract, 1,000 a contract. And having said all that, for those of you who haven't taken my classes, you are clueless. You can do a $90 to $85 spread instead of a $90 to an $80 spread. That is a $500 commitment on your part with a 20 to 30% on $500. Now you're risking $300 to $400, which is similar to what you're risking here. So it pays to take my classes. Taking one of my classes will run you $200. These can make you thousands and thousands of dollars. And you can do this with stocks all over the map. Every stock out there that has options, you can do the strategy with, whether it's a takeover offer or not. You like Apple, you love Apple, and you think in the next 6 months, Apple will come up with decent earnings reports, new iPhones, new products. You can write credit spreads on Apple that are $200, $400, $500 in gross capital requirement, as many of those as you like, because you learned how to become a credit spread writer taking my classes. There you go. You're going to do this for the rest of your life. Okay. Anyway, there you have it. I hope I haven't bored you too much with this class. This is longer. This show is longer than my last video, but there's a lot more in it for you to absorb and adjust. You can just do it with stock. You can do this with cash secured puts. You can play this game with credit spreads. It pays to take my classes and learn how to do this stuff. Like I said, you'll be able to do this forever, not just one deal. Okay, I hope you've enjoyed it. I want to thank you again for giving me thumbs ups for these videos, subscribing to my channel. I'll keep you posted on this eBay GameStop story as it evolves. I know there are many of you who have been involved in GameStop forever, and there are ways for you to take advantage of your ownership of your shares to make some extra dough while this deal is going on. And let's see how it all works out. Thank you again, everybody. Have a pleasant day, good week, and stay tuned for another update as we keep following this story. Uncle Bruce from Calgary saying thanks again, everybody. Appreciate you. We'll talk to you next time. Bye for now.